Hey traders, today I'm sharing my top 10 tips for trading the euro, from the basics to the advanced that I've learned in my 20 years of trading. Hello everyone, I'm Lien. I just started placing my very first Forex trade while working at JP Morgan. And since then, trading the euro and euro crosses has become my bread and butter. These pairs are not only my favorites, they're also the ones that have consistently delivered the best results. Now, I get asked all the time, what's the best currency pair to trade? The answer is simple, the euro. It's one of the most popular instruments in the world, and euro-dollar is the perfect starting point for any new trader. With over $1 trillion flowing through it every single day, this pair offers massive liquidity. And what does that mean for you? It means tighter spreads, smoother price action, and most importantly, trends that can really run, sometimes for weeks or months at a time. It has a personality, it follows patterns, and once you learn how to recognize them, it can actually work in your favor. I've learned a lot over the years, some the easy way and some the hard way. But today, I want to share everything I've learned about trading the euro so you can skip the mistakes that I've made myself early on. But before diving into these tips, please do me a favor, take a second to subscribe to the channel and hit that notifications bell so you don't miss any new videos. Trust me, you won't want to miss them. All right, let's jump into how the euro-dollar moves. Essentially, euro-dollar compares two huge economies, the Eurozone and US. The pair moves based on the relative strength or weakness of these two countries, whether they're doing better or they're doing weaker compared to each other. Now, this is the way you want to think about it. If the Eurozone is doing well while the US is struggling, the euro-dollar theoretically should go up. If the US economy is strong and the Eurozone is weakening, euro-dollar should go down. Of course, it's not always that simple, but this is a great starting point for understanding how the pair actually moves. Now let's start talking about something practical, pip values. I promise, some of you know this already. I'll get to the tips very soon, but some of you are brand new to trading the euro, and I want to share this basic but important information about how to make money trading euro. For euro-dollar, 1 point or pip is worth $10 per standard lot, which is 100,000 units, $1 per mini lot, which is 10,000 units, and 10 cents per micro lot, which is 1,000 units. Now, most of you will most likely be trading the 10,000 increments, which means each pip is worth $1. This is crucial for position sizing and risk management. For example, if you're trading one mini lot and the euro-dollar moves 50 pips in your favor, that means that you make $50. If it moves against you, you lose $50. This is how you calculate your risk and determine where your stop loss is. So if I'm willing to risk $100 per trade, I can set my stop at 100 pips, I'm trading one mini lot, or 50 pips, I'm trading two mini lots. It's that simple. And now I'm super excited to share my top 10 euro trading tips. These tips have been key to my trading success over the years, and I'm confident they'll work for you too. Let's get started. Tip number 1, ride the momentum and trend. One of the main lessons that I've learned about trading the euro is that once it starts trending, it really takes off, and it really sticks to that direction. And this is true whether you're trading it on a short-term basis, day trading it, or swing trading it. And this is all thanks to the massive liquidity that not only sparks these trends, but also helps them maintain their momentum. This insight has been the cornerstone of my own trading strategy, which has delivered 26 consecutive positive months, though of course past performance is not indicative of future results. And as you can see from this chart, steady wins with small losses month after month. Riding the momentum and trends is the big reason why my ZIP strategy works so well, and why euro pairs, especially euro-dollar, and euro crosses like euro Aussie, euro yen, euro Kiwi, euro CAD are consistently some of my best performers. Tip number 2, keep your data simple. When I first started trading the euro, I thought I needed to track data from all 20 Eurozone countries. That was exhausting and honestly pretty useless. What I've learned is that only German and Eurozone data really moves the euro, and German data is usually the ones that are released first, so that's more market moving. I focus on 5 sets of data: inflation data, the PMIs, jobs reports, GDP, and sentiment indicators like the IFO and ZOO. That's it. Keeping it simple has made my analysis so much clearer. Tip number 3, Take the ECB seriously. I've learned not to second guess the European Central Bank. Unlike some other central banks that like to surprise the markets, keep them guessing, the ECB really likes to telegraph their moves. When they say they're thinking about raising interest rates, they usually mean it. I used to try to outsmart them, thinking, the data has been weak, they shouldn't leave interest rates unchanged, but that's cost me money more than once. Now I listen carefully to what they're saying and position accordingly. Tip number 4, it's usually about the US dollar. Something that took me a while to really grasp is that Eurodollar is driven more by US dollar strength or weakness than the euro. Good US data usually means Eurodollar goes down. Weak US data often sends it up. If there's a good Eurozone report and a good US economic report, the market usually favors the US release. Tip number 5. Watch those round numbers. This has become one of my go-to strategies for day trading. Eurodollar has a tendency to gravitate towards round numbers like 119, 110. If we're trading within 20 pips of an untested round number during the active market hours, 6 to 8:30 a.m. New York time, there's a strong chance that 9 times out of 10, in my experience, that the price will actually test that level. You can actually see this in action in this recent Eurodollar chart. Eurodollar has been trending higher, and right at the early New York Open, it hits and breaks through the 116 level. It's not always guaranteed, but it's a strategy that has been consistently reliable for me, and I use it often to time my entries. Tip number 6, timing matters. I found that Eurodollar really comes alive between 4 a.m. and 8 a.m. New York time. That's when the European economic data usually hits and both the European and US traders are active. Since I'm based in New York, I can't trade the Eurozone time frame, so I trade between 6 to 9 a.m. On the flip side, 12 p.m. to 8 p.m. New York time can be pretty dead. London's closed, Asia's sleeping, and there's usually not much happening. So don't fall for any false signals after 9 a.m. New York time. Tip number 7, don't sleep on those crosses. While most traders will focus on Eurodollar, I found that my most consistent profits come from the Euro crosses. Pairs like Euro Aussie, Euro CAD, and Euro Kiwi can trend beautifully, especially during the Asia session. I typically trade these crosses between 8 p.m. and 10 p.m. New York time. That's when I put on my trades, right when the Asia session opens. Here's a great example with Euro Aussie. A zip signal, sell signal forms with a white candle and a red background. The red background indicates a bearish long-term trend, while the white candle shows that the shorter-term trend has also turned bearish. I sell at the close of the 1-hour candle, and as you can see, it's a smooth ride lower for almost 50 pips. Without the US dollar complicating things, these crosses often provide cleaner setups and more straightforward fundamental plays. And when the setup is right, these pairs can move fast with minimal pullback, which I love. If you want to learn more about how the zip strategy works, I've included more details in the description below. Tip number 8. Try the London breakout. Here's a simple approach I like for day trading. I'll mark the high and low of the Asia session into the London Open. Then watch Eurodollar either break that level by 10 pips or more when the London opens. When it happens, I'll ride that move for 15 to 20 pips. Here's a recent example where 1650 is the low in the Asia session and 1675 is the high at the London Open. It breaks 30 minutes later, consolidates, then boom, a 20 pip rally. It's not complicated, it's a pretty reliable strategy for me. Tip number 9, look for alignment. My best trades happen when both the fundamentals and technicals are pointing in the same direction, like when the German ZU data comes out weaker and I have a solid technical sell signal on EuroCAD. Or when the US retail sales report comes in strong and Eurodollar is sitting at a key resistance level. When both fundamentals and technicals agree, that's when I feel the most confident about my trade setup. Tip number 10, respect the bigger picture. Even when I'm day trading, I always check the longer term trend and what it's happening. Eurodollar can trend for weeks or months, and I found that my day trades work better when they're going with the bigger picture and the overall trend rather than against it. It's just one of those things that has made a huge difference in my results over the years. And so I've always looked at the longer term time frame of the 4-hour charts and the daily chart. I hope you found these tips helpful. If you want me to do a video on trading the yen or other currencies, let me know in the comments below. You can type yen tips or something like that, another currency. Don't forget to subscribe to the channel, hit the notifications bell for updates so you don't miss those videos. Also, if you want to dive deeper into my zip strategy and learn how to trade it with precision, check out the links in the description below. Don't wait, start trading smarter today, and I'll see you all in the next video.